Although many would say President Joe Biden's withdrawing from the 2024 presidential race was not a complete surprise, it has already had an impact on the housing market. So, if we're already seeing such an immediate impact, how will this continue to play out in our mortgage interest rates leading up to the election? Well, that's what we're going to be covering in today's video. And if we haven't met before, I'm Nicole Rueth, SVP mortgage originator of over 22 years and housing market geek. And if you want to stay up to date on all things real estate, mortgages, and home buying tips, be sure to hit that subscribe button down below. And please, if you find value in this video, don't forget to hit that thumbs up button or share it as well. All right, let's get started. On July 21st, Biden shared a letter on social media announcing he was stepping out of the 2024 presidential race, calling it the greatest honor of my life to serve as your president. This announcement, in the midst of an already volatile election year, has the potential to steer the housing market in a different direction. However, it may not have as drastic an impact on interest rates as one may think. So today, I just want to offer a bit of context to interest rates and the housing market movements during a heated political season, and offer a few predictions on where things could go from here. Biden's announcement sent interest rates rising, the probability of a Fed rate cut in September dropping, and stocks amiss given more uncertainty than just the day before. Prior to Biden's Sunday announcement, the former President Trump secured the largest national lead in the polls over Biden up to that point. I mean, the tailwind helped spark something called the Trump trade, which describes a strategy to invest in the assets and stocks that investors believe could profit under a Republican White House, ranging from cryptocurrency to energy stocks. Now that President Biden has stepped down and Vice President Kamala Harris has gained support from leading Democrats to replace Biden atop the ticket, a tighter race than predicted could spark more volatility across the United States markets as investors try to gauge which party's economic policies will prevail. Volatility in our economic and political environment does move interest rates as investors weigh their options and tolerance for risk. But the small rate increase, less than 0.1%, that we saw on Monday had less to do with Biden and more to do with the European markets on that day. Bottom line, what is moving rates has a lot more to do with labor, inflation, and the comments that Powell makes about the Fed's decision to start dropping the Fed rate than politics. July 30th and 31st is the next Fed meeting, leading up to Fed Chair Powell's speech at noon Mountain Time on the 31st. No one is expecting a rate cut in July, while there is a 96% probability of a rate cut in September, which is down from 100% just a few days ago. Powell's comments after his prepared speech will give the market clues on the speed and depth of the rate cuts expected. Note that the timing of Biden stepping down lined up perfectly with the drop in probability of a September rate cut from 100% to 96%. However, I'm going to dismiss this drop and call it coincidence, because there are movements in the investor probabilities daily. A more likely candidate for the drop in the probability was on the same day President Biden made his announcement. Goldman Sachs released its GDP forecast of a 2.5% growth in the second half of 2024, which would put the U.S. on pace to match 2023's growth and was stronger than expected. The next 3 months leading up to the election will come with a lot of politically charged emotion, fear, and uncertainty. And this will have an impact on the psyche of home buyers and sellers as they try to determine their best timing to either buy or sell. What it will not directly impact is rates, nor even home prices, as those are much more driven by our economics as well as supply and demand fundamentals, not politics. So while I'll be watching the election, it will not be for reasons of measuring the movement of interest rates. Instead, I'll be leaning into the election's impact on the potential leaders of the Federal Reserve, the Federal Housing and Finance Agency, the Consumer Financial Protection Bureau, and the Department of Justice. I'm going to be watching for regulation and enforcement of housing issues, including appraisal bias, fair lending concerns, and the role of realtors going forward. I'm also going to be listening for the continued conservatorship of the government-sponsored enterprise Fannie Mae and Freddie Mac. We all remember vividly the headline-making push to release both right before Mark Calabria was removed from his position. I'm also going to be watching for the economic policies that impact housing, including tariffs, taxes, and incentives to build more homes. Well, that's a wrap for this week's market update with a little bit of politics splashed in. If you want to dive deeper, not into politics, but in the benefits of homeownership, check out the video I have linked on the screen now. And make sure to subscribe and comment down below. Let's do this together.